empezar a grabar. Bien, vamos a empezar a grabar y les vamos a dar la bienvenida. Welcome and bienvenidos to BAM on Zoom at noon. This is a space that has been created to bring us together, bring our Latino businesses together with resources, with opportunities, with growth. It's really to create community and support each other. I am Cris Oviedo, and I have the honor to moderate these spaces every third Friday of the month. We want to give thanks to everyone who has joined us today on Zoom. And thank you to everyone, that will be watching this later on our YouTube channel. BAM, it's a space that sometimes is fully in Spanish. It's a space that many times is in English, but most importantly is a bilingual space and is a safe space where we come and we talk about things that are important to our business community. We want to thank our BAM sponsors. You can see them on our screen right now. Kaiser Permanente, Smecca, and Fulton Bank. Thank you so much for your support. I also want to remind you all and we want to thank our corporate sponsors as well. You see them all on our screen, and remind you that if you would like to be a sponsor, if you'd like to connect with the chamber and you'd like to partner with us, you just need to reach out to us. We'll put the email on the um, We'll put the email on the chat for you. And if you're watching the recording, feel free to email us as well. Just go to our website, mdhcc.org, and that's where you can find all of the information. And also on our website is where you can find all of the upcoming events that we have coming up for you. Please check it out, mdhcc.org. We have many, many events for you coming up. We have, this space, BAM, every third Friday of the month. We have different opportunities for you to come together with other businesses in the area. We have networking events. I want to bring your attention November 3rd. We have the Infrastructure and Transportation Summit. That is an event that I had the privilege of attending last year. It's fantastic. You can come and learn about all of the upcoming opportunities, everything that's happening in the infrastructure space here in Maryland. You hear from the main players in that space, and it's just a great opportunity for you to come and for you to just come and be part of that and learn everything that's happening and spotlight your business to the makers of the decisions here in Maryland. So November 3rd is when you can come and be part of that. That's happening at the Hilton at BWI Airport. All of the details are at our website, mdhcc.org. Today we have, we're going to learn about how to access the credit, which is one of the most powerful tools for growing and sustaining a business. In this interactive workshop, we have Angeles, and she is the branch manager from PNC Bank. She's an expert who will walk our business owners who have joined us this afternoon through the essential steps of establishing and maintaining strong business credit. Everyone that's here, everyone that's watching will gain a deeper understanding of what lenders look for, why credit worthiness matters, and how a solid credit profile can open doors to new opportunities. This session is also going to cover the key documents and the financial information that's required to prepare a strong loan application. It's going to help all of us avoid common mistakes and increase our chances of approval. So whether you're just starting your business or if you're looking to expand your business, this presentation is going to provide you with valuable insights into managing credit effectively and positioning your business for long-term financial success. So without anything else for me to say, I want to give Angeles the floor. So Angeles, thank you so much for being here. Really appreciate the fact, just you coming over and being with us. So take it away.
Yeah. Well, hello everyone. Pleasure to electronically meet all of you guys. Like Chris said, my name is Angela. I am a business branch manager at PNC. So I have been working with PNC roughly about 7 years or so. And I have focused a lot in like small businesses, and how we're able to, get them started or meet them where they are. So, we'll be doing this presentation. Of course, it's something that I believe it's very important for a business, and like Chris said, to sustain and make sure that we meet all our financial goals overall. There's some businesses sometimes that they don't sustain more than 3 years because there's not a sufficient plan that they have. So I want to make sure that the information that I provide to you, and at any point of my presentation, you have any questions, also just let me know. Sounds good. And I also will want this to be a little bit of engaging as well. So, there might be some questions in the slides. And if you guys are, not shy or anything, you can always just go on mute and let me know what the answers are. Are you guys ready? All right, perfect. And Patricia, I don't see the screen on myself, so I don't know if it's just my phone.
Oh, let me stop the share and share again. Let's see if that improves. Sorry about that. I was looking at it but it seems like, can you see it now?
Let me see. Yes, now I can see it. Thank you so much.
Okay, perfect.
All right, perfect. So now that I've done my introduction, I do want to say credit can help you grow your business, whether you have already established a small business or you're just starting out. According to the Federal Reserve Bank survey, 43% of small businesses applied for financing in 2018 and 2019, and more than half got the credit they wanted. Many businesses do not apply because they're either discouraged or think that they won't qualify, and are worried about taking any debt. So, in this workshop, you're going to learn how small businesses build and maintain a credit. We're also going to explore how credit worthiness is measured for small businesses. We're also going to discuss examining the connection between personal and business credit, which is very important. And we're also going to be identifying the documents that you will need for any small business credit applications. So if we go to the next slide, um, today we will explore, um, give me 1 second, my screen, there you go. So there is gonna be, of course, a first question. So our first question will be, why is business credit important? So similar to your personal credit score, your business credit score helps determine how you help your business um, I'm sorry, to determine how your business can be trusted to handle money. Which of the following may be affected by your business credit score? Can anyone answer? And you can select all that apply. So it not necessarily has to be only one.
Say all of the above.
Was that Andrea?
I was gonna say all of the above.
All
Are
of
they
the
not?
above? Perfect. Yeah, you're absolutely right. It's all of the above. Your business credit can affect your ability to qualify for a business loan, your insurance premiums, the terms you can get on a line of credit, establishing partnerships, and attracting investors as well. Perfect, thank you. So our next slide will be, what is credit worthiness and what are the factors that lenders and creditors use to determine? Credit worthiness measures the ability for you and your business to repay a loan. Before lenders and creditors can approve your request for financing, they want to make sure you are likely to repay the debt. There's a crucial part of credit worthiness is in the 5 C's of credit. These are the 5 quality lenders and creditors use to measure how risky it may be for them to lend you any sort of money. So, lenders want to know, how do you pay your bills on time? Do you stay within your budget? Is your income steady enough to repay the loan? Is your business already running and making money? And have you demonstrated stability, work, and business? So we move to the next slide. We will be discussing the 5 C's that I had just mentioned, and this will be the 5 C's. The first one will be capacity. Can you repay now and in the future? Next one will be capital. What personal funds and profits have you invested? Then we have collateral, personal or business assets you can use to repay the bank if you default. Then we have character, your history of following through in life and businesses. The next one will be conditions. Do external factors favor the success of your business? So the five C's are credit at capacity, right? So our capital, collateral, character, and conditions. Capacity shows you the ability to repay debt from your current and future income. So ask yourself, are your personal income and business revenue sufficient to pay your bills? Is it any existing debt or new debt? And does your business show any history of profitability? What indicators show the profits will continue in the future? So this is something that banks will extremely be looking at. Now, explaining a little bit more about capital is it's important to lenders because it indicates how committed you are and how much skin you have in the game. If you have invested your own money in your business, you may work harder to make it succeed and ask yourself, how much of your own money have you invested in your business? And is your assets higher than your liabilities? Collateral provides creditors and means to recoup and get back the money they lent to you in case you can't repay the loan as agreed. A loan is considered secured when a specific assets and collaterals are committed to a creditor in the case of inability to repay. This reduces the lender's risk and ask yourself, do you have any assets such as vehicles, real estate, or equipment that could function as collateral? Will this credit be used to purchase assets that can be used as collateral? And what is the value of those assets? We also have characters, measuring your stability and commitment to financial obligations. And ask yourself, do you have a history to repay your financial obligations in full or on time? Do you have a good track recording or holding a job and managing profitable business? Have you ever declared bankruptcy? And the last one, condition. Describe how the economy and other external factors will affect your ability to repay debt. And ask yourself, what opportunities and risks does your company face from changes in your industry and the economy? What are the trends in your industry? A similar are similar companies expanding or contracting? What competitive edge does your business have? How will the loan improve your business profitability, efficiency, and stability? Now that you know more about the criteria lenders and creditors use to evaluate credit worthiness, let's see how the five C's apply in different scenarios. So if we go to the next slide, there's going to be a question and you guys can answer me and tell me which of the five C's would be this. So you own a small embroidery and costume printing business and have some expense equipment. A portion of the loan you're applying for would be used to purchase a new machine to embroider leather. What would the value equipment represent to lenders and creditors? Does anyone know the answer?
It's C, collateral.
Collateral, that's correct. So in this case, the equipment will present collateral. Since the embroidery and printing equipment has resale value, if you're default on the loan and the lender creditor could come back and with their money by selling it. Collateral with like equipment and real estate and other assets you own protects their investments in your business. It acts as a guarantee and reduces the risk. Next question will be on the next slide. You run a bait shop near a popular fishing area. Your main competition in the area recently retired and their store closed. This will represent which of the five C's?
I think that will be conditions because it's outside.
Of conditions, okay?
Yeah.
Anyone
E.
else?
I also think it's conditions.
Okay. If we go to the next slide, there you go. You guys were correct. And so for this, in this case, the equipment would represent conditions. Conditions relate to the state of your industry, the demand of your product and service, and your competition. In this case, the other bait shop closed because the other owner retired, which means they are likely an opportunity for you to capture some of that competitor's customer and expand your business. If they had failed due to enough business, if they had failed due to not enough business, it might be a different story. However, since the shop is near a popular fishing spot where demand for bait and tackle is high, lenders will see the competitors closing as favorable condition for the success of the business. Now we have next question on the next slide. For 3 years, you have had a food truck that serves local businesses. When you start, you purchase the truck with savings, but bought the equipment with a credit card. You still carry a balance, but have paid on time for 3 years. Which of the 5 C's will this represent?
I say character, D.
D. Okay. Anyone else?
A and D.
A and D. Okay. Anyone else? There's actually 3 answers for this. 3 correct answers. So A is correct.
It would also be C because you have a food truck for collateral.
Perfect. So if we hit the next slide, the correct answer would be your cash investment in the food truck and consistent on-time payments on your credit card will represent capital, capacity, and character. Collateral is also correct, but we'll look at capital and capacity characters. So by investing your capital, lenders see that as a favorable because you are most motivated to succeed and protect your cash investment. It's also potentially represents collateral. By paying your debt on time every month for 3 years, creditors see a strong history of repayment, which demonstrates your character. On the negative side, the fact that you still carry a balance can reduce your capacity to repay a new loan. Now that you know more about the 5 C's used to evaluate credit worthiness, let's examine how other considerations may affect your credit worthiness. So if we move to the next slide. The more prepared you are when you approach a lender, the better your chances are of receiving funding. You should be prepared to answer questions when you meet with the lender and fill out an application. As the lender is likely to ask questions to fall into the 5 board areas. Backroom or general questions, right? So about your business, such as when your business is incorporated. Have you invested your own funds? What personal or business collaterals do you have secured the loan and line of credit? Also, questions about management and employees, including how many people work for you and their experience. So, what type of experience do you or any other managers have? How many employees do you have? Are they full time, part time? How long have each employee been in your company? Business operation questions are also asked about products and service, industry, outlook, and clients, such as what are the products and services that your business provides? Are they all a line of business profitable? Which of the profitable and why? Who are your clients and how many do you have? Also, financial questions about your business financial history and documentation, such as do you have 2 to 3 years of financial statements plus interim current year statements? Do you have 2 to 3 years of business and personal tax returns? Is your business profitable? How long has it been profitable for? Also, personal questions about personal credit history, including bankruptcy, such as what is your and your family's personal financial budget, and what sources of income are available to cover your living expense. Most lenders will provide a personal financial statement for you to complete. How is your personal credit? And are there any discrepancies that need to be explained, such as a divorce or medical issue? Do you guys have any questions based on this information about other considerations by lenders. Perfect. So a lender will ask many questions to learn about your business, which makes the process of applying for a loan a great opportunity to understand your business better. Now we'll take a look at the relationship between personal and business. So on our next slide, especially for new and very small businesses, a good personal credit score is key to obtaining financing. While many lenders will evaluate your business comprehensively, as discussed, some will look at your credit score as the primary indicator of that decision. How many of you guys have ever gone to a bank and attempted to apply for a loan? How many of you guys were successful in getting a loan approved? Just a quick question.
Do we consider credit cards loans or just loans?
Just loans.
Yeah. Uh-huh.
Okay. And does this take you at the first time, like you submitted the loan and it got approved, or did you go through a process to maybe building that credit from maybe your personal score to a business credit card to get to that loan?
It was a lengthy process.
It was a lengthy process. Okay, perfect. So yeah, this discuss about how important personal credit is important when it comes to your business, because they always will look at your personal credit score first to make sure that you are able to maintain and sustain that business credit as well. So there are two types of credit score: personal credit score and business credit score. And thank you, Chris, for answering that for me. Unless you're a larger business with established track record, most lenders will look exclusively at your personal credit report and score. Your credit score is calculated by an independent agency that tracks a variety of information on your credit. So on our next slide, here is a questions for you guys. Which of the following strategies can you use to build your personal credit? Does
A.
anyone know?
I'm going to say A, C,
Okay.
and E.
You said A and one, I'm sorry?
C.
A, C.
Mm-hmm.
Okay.
And
Anything else?
E.
Yeah, that's
Yeah.
correct. The correct answer is A, keep your credit balances low. C, obtain a credit card. And E, pay your bills on time. Perfect.
We're gonna give Chris very good credit score.
Yeah, we are. On the next slide, we're gonna review the top reasons why scores go down and review how to improve them. So the top reasons why credit scores go down are late payments, collections for 7 years after occurrence, bankruptcy for 7 to 10 years after occurrences, high debt compared to income, too many recent credit inquiries within the past year. A credit inquiry happens each time you apply for credit. Charge off, which are when a consumer becomes severely delinquent on a debt, and this usually happens for 7 years after occurrence. Using most of your available credit or maxing out your cards. Here are some tips to help you improve your score. Pay all bills promptly. Keep low balances on credit cards. Do not take too much debt. Stay on the same job and address for a long period of time. Read and understand your credit report. Make written inquiries on items you believe are incorrect. How many of you guys thought that maybe staying at a job or address for a long period of time will help your credit? That
I
was
didn't know that.
Yeah, that's something new for that was something new for me as well when I came into banking. Perfect. So paying bills in full and on time is the best way to build good credit. And then if we go to the next page, or the next slide. Let me see. What is the business credit report? I have if you have seen in business for a while, You may have seen business credit score as well as personal one. How are business and personal credit reports similar? Both are used to decide if a business or individual is qualified for a loan. Both help determine if a business or individual is likely to repay the loan. How are business and personal credit reports different? Well, personal reports draw from information from the person and their transaction history, while business reports draw from the information about the business and its transactions. Lenders can compare one business and credit report to others in the same industry to evaluate the business's stability. Lenders may use both personal and business credit reports, but suppliers will use a business credit report as a deciding factor. For example, when deciding whether to extend a line of credit to that business. You can access one free personal credit report per year from each of three main credit bureaus: Equifax, Experian, TransUnion. You can access your business credit report for free, but you can do it for a fee of the three major business credit bureaus: Dun and Bradstreet, Experian, and Equifax. If you can go and move into the next slide. Perfect. So let's look at this question. Which of the following ways might a lender use a business credit score? A, do they decide if a business credit worthy? B, establish a history of financial responsibility. C, determine a size of a loan that they can give a business. D, approve or reject loans. Or E, assets the risk in lending money to the business. It could be one, it could be all, it could be none, it could be multiple choice.
This one's all of the above again.
I agree,
All of the above?
Andrea. Yeah.
Yep. The correct is all of them. Lenders may use a business credit score to decide if a business is credit worthy, establish if a history of financial responsibility, to determine the size of the loan they can give to the businesses, to approve or reject loans, and to assess their risk in their lending money for the business as well. Okay, let's move to the next slide. Here is how you can locate and review your credit report and when the numbers meet. There are a few significant differences between personal and business credit scores. These scores are calculated based on the data in your credit reports, which are created by a different agency for businesses than they are for individual. For example, personal credit scores range from 300 to 850. You can access your score for a fee at myfico.com. And then we also have business credit score range from 0 to 100. You can access your score for a fee this can be from DNB, which is Dun Industrial, Bradstreet. There's also one for Equifax for business, and there's also for Experience for business as well. A different business credit score is the FICO Small Business Scoring Service, which is SBSS score. It combines information for both your personal and your business credit, and it ranges from 0 to 300. You can also obtain your free report from Annual Credit Report. And then this one will be for your personal, so you would just go to annualcreditreport.com, and then there's also a phone number for them as well. As you can see, lenders use your business and personal credit when making decisions about a loan application. What are some steps you can take to maintain a business credit?
I have a question there,
Yes.
Angeles. I noticed that banks now have, they're tracking your credit score, right? And so how accurate is what we see in the bank app, let's say, right? And I suppose that doesn't affect us or doesn't affect our credit score. It's not like a formal request for a credit score, correct?
That's correct. So what you see on your mobile banking, for example, that's just an estimate of what the credit score will be. You won't know the exact amount unless you request the report, of course. And based on the banks, so all these banks use the FICO score, or like, well, different institutions use something different. However, this is a soft pull that they do on your personal credit score, that they do on a monthly basis. And this is what not just banks, but other, merchants are able to give you promotions, for example. Pretty sure you get promotions from different types of bank telling you pre-approved for such and such. That's because they use the soft pull inquiry on your personal, where they're able to get this information from. But it doesn't affect you unless you do a credit application.
Thanks.
And, yeah, any other questions? Perfect. So let's move into the next slide. Like with your personal credit, the most important tip to maintain good business credit is to pay your bills in full and on time. Steps to building better business credit include paying your business credit card on time, keeping business credit card balances low, and paying in full at least occasionally. Always make at least the minimum payment. That's very important. Steps to keeping and maintaining business credit include applying for or receive a data universal number system, which is DUNS, number for Dun and Bradstreet, and a tax ID number for the internal or for the IRS. Subscribe to a credit report service such as Equifax, um, Dun and Bradstreet, or Experience to monitor and protect your credit. Make sure that your business information is accurate and up to date on your credit report. Establish trade lines with vendors and encourage them to report your on-time payments back to the credit bureaus. Okay, go ahead and go to the next slide, please. Thank you. So let's read this. The Davids have a small moving business. They specialize in helping companies take down and reinstate their computer system when they change location. Their business is profitable and but they do not have established business credit. Their personal credit is okay. They pay on time by carrying a large balance in several cards. What would help them qualify for a business loan? What do you guys think?
D, I agree with Carlos. D.
I think it's
Yeah,
D.
D.
Yes, absolutely. In this case, the most important step to take down is to reduce their credit card debt and improve their personal credit score. For new and very small businesses, lenders and creditors will use your credit as a crucial factor to determine creditworthiness. Paying down your credit card debt makes them more capable of repaying a business loan and will also improve their personal credit rating. Your personal credit rating can be a crucial factor in receiving business funding. And then let's look at the next scenario, please. Perfect. Cynthia Yang makes costume jewelry with precious stones and metals. Her Instagram and Pinterest accounts have huge following and sales are steady. Her personal credit is solid. She has a business credit card but never uses it. She pays her suppliers on time, but they do not report to the credit agencies. In about a year, she would like a loan to expand her business. What would have the most significant impact on her creditworthiness?
E.
Okay, someone said E. It's multiple choice. So just a clue.
I think it's A,
Anybody
B,
else?
and E.
E and what was that?
A, B, and E.
A, B, and E. Well, if you hit the next slide, the correct answer is actually B and E. Cynthia can strengthen their business credit in two ways. She can use and pay for her business credit card. She can also request that vendors report her on time payments for supplies and equipment. Cynthia's personal credit is strong and she is in a position to build up her business credit score before she's ready to apply for a loan, as she doesn't need the money for another year. Now is the time to help her to take action. Once you have established and maintained a good personal and business credit, how do you apply for a loan? You may have already applied for a business loan, but it's always good to review this process. Let's talk about the information you may be required to provide the lender. If we go to the next slide. If you have already applied for a business loan, you are familiar with the process and necessary documents. If you have not yet applied or plan to apply for further funding, it's important that you know that you will be required to provide to a lender. Refer to this checklist, and I can also send this out to you guys if you need me in the future. Business credit application, you also need a personal credit report, and which the bank will put one. 2 to 3 years of personal tax return, depending on the credit request. Usually for credit cards, they don't require that, but for loans, they do. 2 to 3 years of business taxes, 2 to 3 years of business financial statements, plus interim current year statements, current personal financial information, copy of sales contract or purchase order in purchasing equipment or real estate documents of any current loans or business lease agreement, your business license, proof of business checking account, disclosures if you own any other businesses or if your company has any partners, and then a business plan. It's a plus, but it's not required. Each of the documents on the checklist gives the lender key information about your business. For example, 3 years of financial statement and taxes show a history of profitability and if your business has the capacity to repay debt. A business plan shows the plan of your business future growth and any industry challenge to face. Sales contract can represent a business access and who the lender is and what the collateral can secure on the loan. If we move to the next slide, and I know we're short on time, so I'll try to be.
Yeah. Oh, what quick question
Yes.
here. What happened to businesses? There has been a business, let's say a year and a half, 2 years max, and so they don't have like 3 years of tax returns and to show. Is that, something that is going to be really hard to get a credit loan, or what do you recommend in that case?
Yeah, so it is 2 to 3 years. So even if it's 2 years, or maybe like you said, 1 year and a half, right? Maybe they have that 1 year tax statement. So usually what happens is that we will, recommend having at least a credit card with the business because it has already a credit established. Now, because if they're doing a line of credit, for example, and they don't have the 2 years, one of the things that they can do is a business plan or, basically say to the bank, well, with this loan, I will be able to obtain blah, blah, blah equipment or contract or whatever that may look like. And this is where my business will be at in the next year. So you kind of provide a projection of what that will look like. And a lot of the banks will take that in consideration as well. So Small Businesses Administration, which is the SBA, partners with financial institutions to help small businesses that may not qualify for traditional loans. This government program reduces the risk for lenders by providing a partial guaranteeing the business default on the loan. Ask your lender what programs they offer and if you may qualify. So a lot of the banks already use the SBA on loans. So that will be something like if you're going to your bank, just make sure you are asking for this information. Just to move a little bit quicker on the slides, if you can go to the next one. There's like limits of how much you're able to obtain. So for example, for a basic loan program, there's a max limit of $5 million for full amortizing government guaranteed loans. It's 10% down payment by the borrower, 90% a bank loan. We also have the 501 loan program, which is max loan is $5 million. Loans are offered for owners occupied real estate acquisition, construction, and heavy equipment purchases. Again, 10% down by the borrower, 40% of CDC, and 50% of the bank loan. And then we also have the SBA Express and Better Us program. So max loan is $350, fees are waived, business operational for at least 1 year, line of credit or fully amortizing loan with a partial government guaranteed. Loans are offered for working capital, equipment, business acquisition, and real estate purchases, facility expansion, and down payment is as low as 10%. Go on the next page. Community development financial institutions. So this will be nonprofit funding organization, provide business mentoring, financing, and technical assistance at the community level. And for borrowers who may not qualify for traditional loans, many lenders have special programs for businesses owned by Native American women and other minority groups. Next slide, please.
And I want to say there that this is a great alternative when they're like starting a business and the first year or so in business. It's really the CDFI's organizations can make a huge difference.
Yes.
They usually require the business plan that was not necessarily required for lending institutions, so it's always a good idea to do that.
Yeah, definitely agree. And again, this is just a summary. So remember, credit worthiness is a measure using the 5 C's, which is character, capacity, capital, collateral, conditions. And then 2, if you're running a new or small business, or your business doesn't have much of a credit history, lenders rely on your personal credit report and score. To apply for a small business credit, you will need to provide a variety of legal and financial documents. Perfect. Now, we can talk, maybe we can have a Q&A. Do you guys have any questions based on the information that I have provided?
Yes, you mentioned that sales contracts are also a good way, I mean, to be provided as a collateral or as an asset to be eligible for credit. Up to what extent are those really enough? Or what else do you need apart from a sales contract?
Again, it really depends on the amount of the loan that you're looking for. Typically, a lot of like the banks will provide at least 10% of what your annual revenue is, right? However, if this contract is going to double the revenue of your business, and it's a contract for, let's say, 3 years, right? And this is how much or what's going to look like I said, the banks will look at that as a projection for you. So maybe 10% of what you're making now might not be enough. So they will double that. So instead of giving you 10, it will be 20%. So it just really depends on the amount that you're trying to obtain and the amount of the contract as well.
Thank you.
Of course. Any other questions?
Not a question, but like, so I bank with PNC. My business account is actually with PNC, coincidentally. I didn't, but it's for me that whole process of going and opening my account and seeing that my personal, because my business was brand new, I had not really done anything with it yet, and to see how my personal credit impacted my ability to go and get and open my account and then get a credit card right there when I first opened my business. That was very surprising to me. So, on a personal level, just because, so I am married to a realtor, so I have been around, lending for that side of things all my life. But this side was new to me, and to see how impactful it is to really take care of our personal finances and how it may impact and open doors when you become a business owner. That's something that I just wanted to share with everyone because it was my own experience, and I was, I remember sitting down with my banker, and she was like, "Do you want to apply for a credit card?" And I looked at her and I was like, "This is a brand new business." And she was like, "It's not gonna hurt. Like, why don't you just try?" And I did, and I was very, very surprised when she said, "You're approved." And I was like, "What?"
Yeah. Yeah.
How?
So thank you for sharing that. But yes, I try to explain that to all of my business clients, right? Again, you're starting the business. I know it's just brand new, but if you are establishing the business credit now, and then in the future you want to expand, depending on what industry you're in, one way or another, you're always going to be looking to grow to expand because at the end of the day, that is our goal, right? So the only way to do that is having that capital, having that funds to make sure that you're able to expand. And in order for you to get there in a couple of years, you need to start when you first started your business. So, and a lot of the clients sometimes they don't have maybe a personal credit or maybe their credit doesn't, it's not where they want it to be and they might not get approved for the business credit card. Well, we will sit down and discuss ways that we can help your personal credit to then later on go into that business credit portion. But thank you for sharing, Chris. It's very important.
And on that note, we're planning in a couple of months, we're going to have a workshop on how to repair your credit, like hands-on, the step by step, what you need to do and what you need to avoid to see results. And it takes time. It takes a few months to do it and to start seeing the results. But for whatever reason, your credit card was affected, you don't have a good credit card score, well, we'll help people to rebuild it.
Yeah.
And I guess what I would like to say to everyone who's watching and who's listening to this conversation is do not be afraid, because I know many times like we're afraid to go into the bank because we know that we haven't had, the best record, or that we've been late, or, like we disqualify ourselves from the opportunities. So I encourage everyone who's listening and considering getting a loan, we don't know what we don't know. So just go and have a conversation with somebody at a bank and, tell them what it is that you're trying to accomplish. Let them look at your situation and let them guide you, because many times we are not able to accomplish the things simply because we don't know how to do it the proper way. So, if you want to grow your business and you need a loan or you need to apply for a credit card, do not disqualify yourself. Do not do what I was ready to do that day when I sat down with my banker and I said, I was ready to say no, and she had to convince me. And she was like, let's just try it. It's not, she was like, the worst thing that's going to happen is you're going to have a pool in your credit. Your credit will go down for a little bit, but then it'll go back up. So she was like, there's nothing to lose. And that's the message that I want to bring to everyone, that there is nothing to lose. Go and have that conversation, work with somebody, let them guide you. And at the end, you'll be able to get that credit. You'll be able to get that loan and you'll be able to grow your business. So
Exactly.
Angeles, thank you so much for all the information, for bringing us this good information today. If there's any other questions or comments from those of us who are here in Zoom, this is the time to do it. Seeing none, I just want to thank.
Chris, I would just want to say, I would like to share the slides with the attendees. I know that a lot of people have registered, but no, they're not here. So we'll share the slide with the attendees, and we'll post this later on in YouTube, and I put that link in the email, the follow-up email. So if you want to share this information with others, please feel free to do so.
Angeles, I'm going to ask you to please put your contact information on the chat so that, those of us who are here with you can get in touch with you and ask follow-up questions, in an individual way, because I know that this is very individual. I know that this is very personal to sit down and have a conversation about our businesses and share something that is so intimate to us. It's not easy to do in a Zoom group, but that's why, we create the spaces to talk about it generally so that then you can take action. Take it to your business and take it to your bank, take it to your professionals. Find the professional that you feel comfortable with. Ask the right questions, have the knowledge already, ask the right questions, and build your businesses up. Thank you all so much for being here on this Friday on this BAM. I hope we wowed you with information. I know I learned a lot. So thank you so much, Angeles, for your time. Thank you,
Yeah.
Patricia, for setting up this spaces. Really, really appreciate it. And thank you all who are here on our space today, on our Zoom with us today. And thank you to all of you who are watching at home at your own time and also sharing this information, because when we share, we build our community up. And so that's a job that we can all do together. Don't forget to connect with us on our social medias. Go to our website, mdhcc.org, so you can check out all of the events that we have planned for you that are coming up in the near future. Again, if you're a contractor looking for opportunities, and I'm not saying just like a construction contractor, like I am in communications, and last year I learned that there's going to be a lot of need for communications and all of these upcoming projects. There's going to be a lot of information that needs to go out to the community. There's going to be a lot of needs. You will be surprised about all of the needs that come up when you're building a road. You need to provide them with bathrooms. You need to provide them with lighting. You need to provide them with soap. You need to provide them with food. Like there's all of these things that are coming up that our community, I know, excels at. So connect, come and be part of the summit on November 3rd. And, just go to our website, mdhcc.org, so you can see what else we have coming up for you. Thank you all so much for being here. Have a wonderful Friday, a wonderful weekend. And until next time, I am Cris Oviedo and sending you out with a big BAM.
Thank you. Thank you,
Thanks,
everyone.
everyone.
Yeah.